Hey guys, my name is Gareth and welcome back to my Finance Fitness YouTube channel where I break down personal finance, savings, investments, real estate, stock markets and how people achieve financial freedom. So if those are topics that interest you, make sure you subscribe to the channel. You can also click on the notification bell so you receive an alert whenever I upload a new video. If somebody says they're buying a home, you would intuitively think it's an asset. But the author of Rich Dad, Poor Dad, which is one of the best-selling real estate investment books in history, says that's not the case, and some seem to agree with him. And this left me wondering, does that mean I shouldn't be investing in real estate? And maybe you're wondering the same thing. Let's take a closer look. First off, what is an asset? Well, there's quite a few definitions floating around, but here is one that captures the most important aspects and is quite widely used in the accounting world for financial statements. An asset is a resource, in this case a home, controlled by you, from which you expect to derive some sort of future economic benefit. Another example of an asset would be if you had an investment in a stock. Well, since you own that stock, you can control what you do with it. You can either keep that stock or sell it. And you expect to derive some sort of future economic benefit, either in the form of dividends as that company distributes some of their profits every year, or share price movements, or maybe the proceeds when you sell that stock in the future. And a liability is an obligation to fulfill a commitment, usually in the form of debt, at some point in the future. Here, a credit card is quite a good example because you have an obligation to make your monthly repayments on that credit card and reduce the balance down to zero. Many people really look forward to the moment when they buy their first home. It's a big step and a start in your investment journey in real estate. The numbers tend to be quite big as well, and you're binding yourself to a mortgage that you're going to be paying for a long period of time. So buying a home is an asset, right? Well, you no longer have to pay rent to somebody else making them richer, and instead you can direct that rental payment to servicing your mortgage. Your monthly mortgage payment is split between an interest component and a capital component. The interest component is an expense, but the capital component goes towards reducing the total loan balance you have outstanding. And so with each month's capital portion, you're reducing the total amount of debt outstanding, and this increases your personal wealth. And on top of that, over the longer term, real estate values have increased, and if you're the owner, you're going to enjoy the benefit of that increase. And these are some of the popular reasons why many people consider the purchase of a home to be an asset. So why does Rich Dad say no? One of the big statements from the must-read Rich Dad, Poor Dad book is that Robert Kiyosaki argues that your home is actually a liability and not an asset. And this went quite against conventional wisdom and certainly got a lot of people talking. He considers a more simplified definition of what an asset and liability is. And according to him, an asset is something that puts money into your pocket, and a liability is something that takes money out of your pocket. And with these definitions in mind, he says that your home is actually something that's going to take money out of your pocket because you have monthly mortgage payments, you have insurance, property taxes, maybe some repairs and maintenance and condo fees, and all of these are taking money out of your pocket. And therefore, he actually considers that your home is a liability, because by his definition, it's something that takes money out of your pocket. Property ownership can be more expensive, especially if you have some unplanned repairs and maintenance that's necessary. This again will drain your financial resources and take money out of your pocket. Now, this doesn't mean that he doesn't think you should invest in real estate. In fact, he made a big portion of his fortune by investing in real estate and owns over 7,000 units. But rather, don't misunderstand what you're buying and be clear that property price increases are not guaranteed, especially over the short term. And by the way, if you're enjoying this video, please make sure you turn the like button blue. It really gives the channel a big boost. So, is your home an asset or a liability? Well, both in a way, but probably more an asset. An important factor to consider is that you would need a place to live regardless, whether you're buying a place or renting it. Either way, there will be an outflow for your monthly living expenses, and this is something that should be kept in mind. That comparison of whether to buy or rent is something that many of us go through at some point in time. I recently did a video on that exact topic, and I've included a link in the description because it's very relevant to the topic we're doing today. Also, I think one needs to look at more than just the cash flows. Cash flows are critical for wealth generation because it's more tangible and you can reinvest it as you choose. Cash flows are also one of the biggest considerations when people look at retirement because they want to make sure that the cash flows they receive from their investments exceed their monthly living expenses, making them financially free. And this is also true in the corporate world. From my previous work in corporate finance, when we'd look at companies and try and determine how much they're worth, we would focus on cash flows much more than focusing on the net profits. You may have heard the phrase, cash is king. Well, this is something that you hear all the time in business and investments. One of the reasons for this is that you need cash to pay your bills, to keep your business going and to pay your staff. The ability of a business to generate cash is essential to its survival and growth. Cash also gets more attention than profit because profits can be significantly affected by subjective application of accounting standards. And the more subjectivity there is in the numbers that you're looking at, the less you can interpret a meaning from those numbers. But cash is less subjective and it can be a great indicator of the health of a business. But as important as cash flows are, it's not the whole picture. We should also look at the fact that the value of the property will increase over time, and if you're the owner, you would enjoy that benefit. At the same time, you would have been paying down your mortgage balance outstanding. Both of these factors will increase your wealth, but just not in the form of cash flow. In many countries, there are also some tax benefits that make home ownership more attractive. For example, where you can depreciate the value of your property over a period of time, and this will reduce your tax bill and save you some cash. So if you're looking at investing in property, make sure you look into this or speak to your tax advisor. Another great benefit of owning a home is the ability to access the equity in that home. Now, when people refer to equity in a property, it's just the difference between the value of that property minus the total loans outstanding against that property. So for example, if you have a property worth $250,000 and you still have a mortgage balance of $200,000, then your equity in that property is $50,000. Now over time, the value of that property would have increased, and at the same time, through your monthly mortgage repayments, the total mortgage balance would have decreased, and this would have increased the total equity value in that property. And I've used the equity value in a property many times before. When I was living in Cape Town, I bought the property that I was living in, and whenever I had a bit of extra cash, I would take that money and pay it against the mortgage. Now in South Africa, they have this product called an access facility, which means that any money that you pay in excess of your normal minimum monthly mortgage payments, you can access again in the future. So by paying any extra cash against my mortgage, I'm able to reduce the total balance outstanding, I'm able to reduce my monthly minimum mortgage payments because of a lower outstanding balance, and I can access that cash at any point in the future. Then when I find the next property that I want to invest in, I can go and access that cash and use that as a down payment for that investment. Now, not all countries have this access facility, but that doesn't mean that you can't access the equity in your property. One of the most common ways to do this is to refinance that property. Here, the bank considers that the value of the property has increased and the total mortgage balance has decreased over time. And here, they're happy to issue a new mortgage at a higher value, and that is a way for you to extract some cash from that property. So let's say you bought a property for $100,000. You gave a $10,000 down payment or deposit, and you borrowed the remaining $90,000. Now some time has passed and that property has increased from $100,000 to $120,000. And over the same period of time, you've paid down the mortgage from $90,000 to $80,000. Well, when you initially bought the property, the bank was happy to loan you 90% of the purchase price, or $90,000. Now they may agree to do the same again at the higher $120,000 value, meaning that they would extend a loan of $108,000. So in this example, the bank is willing to loan you $108,000, even though your total mortgage balance is only $80,000. And that difference of $28,000 can be paid out to you, and you can use that as a down payment or deposit for your next investment. And lastly, eventually, your mortgage will be paid off. Whether that's after 10 years, 20 years or 30 years, eventually the balance will be zero. And when you reach that moment, your living costs will drop significantly. So what do you think? Is your home an asset or a liability? I'd love to know your thoughts, so please let me know in the comment section. And that's it for the video today, guys. Thanks so much for watching. I hope you enjoyed it. And if you did, make sure you hit the like button. I'll see you next week.